Hey everyone, and welcome back for another deep dive.
Mm.
You ready to get into some nitty-gritty today?
Always.
All right. Well, today we're going to be tackling personal insurance in Quebec.
It's a big one.
It really is.
Hmm.
And so to help us get through all of this, we are using a training manual designed for future insurance reps,
Hmm.
which means we're getting into the real details.
All those fun regulations and rules.
Yeah, exactly. Like stuff that you wouldn't think about,
Hmm.
if you're just, buying your insurance, online.
Right. It's good to know what's behind all of that.
Yeah. So think of this as like Insurance 101, but way more interesting.
Definitely.
Yeah.
Because the manual really goes in depth. I mean, it doesn't just list out the types of insurance. It really goes into the legal framework, the ethics, and even how it all fits into the bigger picture of society.
Yeah, it's like way more comprehensive than I actually thought it would be.
Yeah.
I mean, one of the things that I found really interesting right off the bat was that in Quebec, you can't get individual drug insurance,
That's right. It's all part of the public system.
which we'll obviously get to later.
Yeah, we'll explain how all that works.
Yeah. But I was like, wait, what? That's wild.
It is different.
Yeah. And then also the whole thing about beneficiary designations.
Right.
And if you leave insurance money to someone and then they're later deemed, incapable of managing their finances,
Right.
what happens?
Yeah, that was interesting. There's all these safeguards in place that I had no idea about to protect people and make sure the money is actually used,
Yeah.
for its intended purpose.
Yeah, that was really cool. Okay, so
Lots to unpack.
yeah, lots to unpack. Let's just jump right in. First things first, we got to understand the legal foundation of insurance in Quebec.
The bedrock,
That bedrock.
which is the Code Civil du Québec. That's the foundation of all civil matters in the province.
Okay, so like contracts, property, all that stuff.
Exactly. Everything from marriage to wills to insurance. It's all covered under the code.
So it's like the rule book for pretty much all relationships and agreements.
Basically, yeah. And there's a specific section within the code that deals with obligations.
Obligations.
Yeah, legal obligations. Contracts fall into that category.
Yeah.
And that includes insurance contracts.
So we're talking about like Book 5 of the Code Civil.
That's the one.
Okay, cool. So before we even get into the specifics of insurance policies, we need to grasp some key legal concepts.
Right. These are the building blocks of understanding how insurance works in Quebec.
Okay, like what? Give me an example.
Well, for instance, understanding the idea of legal personality is crucial. An individual, a real person, flesh and blood, has legal rights and obligations.
Okay.
But a corporation is also considered a separate legal entity.
So a company is like its own person in the eyes of the law.
Exactly. It can enter into contracts, own property, be sued, all that stuff.
So in insurance, this distinction matters because we need to know who's actually signing the contract.
Right. Is it an individual taking out life insurance? Or is it a corporation insuring its employees under a group plan? The legal implications can be different.
Got it. Okay. The manual also mentions different types of contracts like onerous and consensual. What do those even mean?
Okay, so onerous just means that both parties have obligations to fulfill. In an insurance contract, the policyholder pays premiums and the insurer provides coverage. It's an exchange.
Like a two-way street.
Exactly. A consensual contract, on the other hand, is formed simply by the agreement of both parties. No need for any specific formalities.
So like a verbal agreement could be binding.
Technically, yeah, in some cases. Though with insurance, it's almost always in writing. You want everything spelled out clearly.
Makes sense. Okay, this is where it gets interesting. The manual talks about vices of consent, specifically fear, lesion, and error. Those sound intense.
They are important concepts because they can actually invalidate a contract.
Really?
Yeah, so fear, for example, is when someone is forced into agreeing to something against their will. Imagine being pressured into buying insurance under threat of losing your job.
That's messed up.
Yeah, totally. That wouldn't hold up in court.
Oh,
Then
right.
there's lesion.
Lesion.
It's about a serious imbalance in the contract where one party is clearly at a disadvantage, maybe because of their age or lack of understanding.
So the law protects people from being taken advantage of.
Right. It ensures that contracts are fair and that no one is being exploited.
I like that. Okay, and what about error?
Error is basically a misunderstanding about the subject of the contract. Let's say you thought you were buying life insurance, but you actually signed up for disability coverage. Oops.
Yeah, big oops. That seems like it would definitely void the contract.
It likely would.
Yeah.
Now, another important concept is capacity to contract. Does everyone have the right to enter into any contract?
I don't know. I guess not.
Not necessarily. Capacity to contract means you have the legal ability to understand the agreement and its consequences. Minors, for example, generally don't have this capacity.
Makes sense.
And in Quebec, the rules around guardianship for adults who may lack capacity have recently been updated, so it's something to be aware of.
Especially if you're dealing with someone whose legal capacity might be in question.
Exactly. You want to make sure that everyone involved has the legal standing to make these decisions.
Okay, cool. Now, this might seem like a bit of a detour, but the manual also talks about marriage and civil unions.
Right.
I'm curious why. What do those have to do with insurance?
Well, your legal status, whether you're married or in a civil union, can impact things like beneficiary designations.
Oh, so like who gets the payout if something happens to the insured person?
Exactly. And Quebec has different legal regimes for marriage and civil unions, each with its own set of rules.
So it's not just about love and commitment. It's also about legal and financial considerations.
It all ties together in the end.
Yes, it's fascinating how these legal concepts have real-world consequences when it comes to insurance.
That's why it's important to lay this groundwork.
Totally.
Yeah.
So by understanding these core principles, you're saying that we'll be better equipped to understand the intricacies of insurance contracts in Quebec.
Exactly.
Awesome. Okay. So we've got like the legal foundation down, like all the basic concepts,
So the building blocks.
the building blocks. Now let's get into the like heart of it all. Like what exactly is an insurance contract?
Well, the Code Civil actually has a pretty clear definition. Article 2389 states that it's basically an agreement where the insurer, in exchange for a premium, agrees to pay the policyholder or a third party a benefit if a specific risk happens. A risk that's covered by the insurance, of course.
So it's like you're paying for peace of mind.
Yeah, you're transferring the risk to the insurer.
Right. Okay, that makes sense. Now, let's talk about the people involved in this whole contract thing. Like, who are the main players?
Okay, so we have the policyholder, the insured, and the beneficiary.
All right, let's break those down one by one. Who's the policyholder?
The policyholder is the one who holds the policy, pays the premiums, and basically owns the contract.
Cool. Like in my car insurance, I'm the policyholder.
Exactly.
Cool. And the insured is the person who's actually covered, right?
Yeah. So it's a person whose life, health, or property is protected by the insurance.
So sometimes the policyholder and the insured are the same person.
Right. Like in your car insurance example.
But not always.
Not always. Think about a company that takes out life insurance on a key employee.
Okay.
The company is the policyholder. They pay the premiums, but it's the employee who's actually insured.
That's a good example. Okay, and then there's the beneficiary. That's who gets the money if something happens, right?
That's right. The beneficiary is the one who receives the insurance payout if the covered event occurs.
Got it. So in a life insurance policy, that would be the person who gets the death benefit.
Exactly.
Okay, I think I'm getting a clearer picture of how all these roles work together. Now, what about the lifespan of an insurance contract? Does it just go on forever?
Not quite. Like any contract, it goes through different phases.
Okay, what are those phases?
So first you have the formation phase.
Formation.
Yeah. That's when the offer is made, the terms are agreed upon, the premium is paid, and the contract comes into effect.
So that's when it all becomes official.
Exactly. Then you have the execution phase.
Execution. Sounds kind of dramatic.
Haha. Well, it just means the contract is active, the policyholder is paying their premiums, and the insurer is providing coverage.
Okay, so it's like the period where everyone's doing what they're supposed to be doing.
Precisely. And finally, you have the termination phase.
Termination.
Yeah, that's when the contract ends. It could be because the policy term expires, the policyholder cancels it, or the insured event actually happens and there's a payout.
So it's like a story with a beginning, a middle, and an end.
I like that analogy.
Thanks. Okay, speaking of stories, the manual goes into some detail about specific clauses that can really affect the insured.
Oh yeah, there are some important ones to be aware of.
Let's talk about those. Like, what are some of the key clauses that people should know about?
Well, one of the most important is the duty of disclosure.
Duty of disclosure.
Yeah. This means the policyholder has to be completely honest and upfront about all the information that could affect the insurer's assessment of risk.
So no hiding pre-existing conditions or your love of skydiving.
Exactly, because if you fail to disclose something important or misrepresent information, it could void the contract.
Wow, that's serious. Okay, what about exclusions?
Exclusions are specific risks that aren't covered by the policy.
Like what? Give me an example.
It depends on the type of insurance, but common exclusions might include things like suicide injuries sustained during illegal activities or pre-existing conditions that weren't disclosed.
So you really got to read the fine print.
Absolutely. Make sure you understand what you are and aren't covered for.
Okay, good advice. What about this thing called coordination and reduction of benefits?
Oh, that's an important one, too.
What does it mean?
It's basically about how private insurance interacts with public insurance schemes.
Like the RAM-Q.
Yeah, the RAMQ, the CNMS, the RRQ, all those programs. So if you have coverage from both, you don't necessarily get double the benefits.
Oh, okay. So your private insurance payout might be reduced if you're already getting money from the public system.
Exactly. It's about preventing double dipping and making sure the system is fair.
Makes sense. Okay, now I want to get into the different types of insurance. Like the manual goes into some detail about life insurance specifically,
Yeah, life insurance is a big one.
for sure. And it seems like Quebec has some unique rules around beneficiary designations.
Definitely. For instance, there's this concept called the irrevocable beneficiary.
What's that?
It means you designate someone to receive the death benefit, and you can't change it without their consent,
So even if you change your mind later, you're stuck.
unless the beneficiary agrees to the change.
Yeah. And there are even situations where beneficiary designations can be totally voided.
Like when?
Well, let's say you name someone in your will as a beneficiary, but they're later deemed incapable of managing their own finances.
Oh,
The court might step in and void that designation.
so there are safeguards in place.
Absolutely, to protect vulnerable individuals and make sure the money is used responsibly.
Makes sense. Okay, what about disability insurance?
Disability insurance is all about replacing your income if you can't work due to illness or injury. So it's important to understand what types of disabilities are actually covered.
Yeah. And also the specific clauses and exclusions in the policy, and how it interacts with public disability benefits from the RRQ.
So it's similar to the coordination of benefits we talked about earlier.
Exactly. You got to look at the whole picture.
Got it. Okay. And we can't forget about group insurance.
Right. That's a big one in Quebec.
Yeah, a lot of people get their coverage through their employer.
Exactly. So with group insurance, there's this whole other layer of complexity because you have the group policyholder, usually the employer, and then the individual employees who are covered under the plan.
Right. And what happens if you leave your job? Do you lose your coverage?
That's a good question. We'll definitely get into that.
Okay, cool. Now remember how we talked about individual drug insurance not existing in Quebec?
Yeah, that's a unique feature of the province.
I'm really curious how that works. Like everyone's automatically covered?
Essentially, yeah. Quebec has a public drug insurance plan that covers all residents.
So private insurers can't offer individual drug plans.
That's right. It's all handled through the public system.
Wow, that's so different from other provinces.
It is, but it's an important part of Quebec's healthcare system.
Okay, I'm starting to understand. So we've talked about insurance contracts, the different players, the clauses, the different types of insurance. What's next?
Well, now that we've got the basics down, I think it's time to dive into the world of investment and retirement products.
Oh yeah, annuities, RRSPs, all that good stuff.
You got it.
Awesome. I'm ready when you are. Okay, let's talk annuities. I gotta admit, this whole concept of like building your own personal pension is kind of intriguing.
Yeah, it's a powerful tool for retirement planning.
But there are so many different types, like immediate, deferred, fixed, variable.
Hmm.
That's a lot to wrap your head around.
It can be a little overwhelming, yeah. But they all boil down to the same basic idea: you're paying for a guaranteed stream of income.
Either now or in the future, right?
Exactly. It's like creating your own financial safety net.
Okay, that makes sense. So how do I choose the right type of annuity? Like what factors should I be considering?
Well, it depends on your individual needs and goals. If you need income right away, like if you're already retired, an immediate annuity might be a good option.
Immediate annuity.
Yeah. And if you want a guaranteed payout amount, you'd go for a fixed annuity.
So that's like a fixed rate mortgage.
Exactly. The payments are predictable and stable.
Okay. What if I'm not retired yet? Like I'm still saving for the future?
Then a deferred annuity might be more suitable.
Deferred.
Yeah. Your money grows over time and the payouts begin later when you actually need them.
Got it. And what about those variable annuities? I've heard those can be a bit riskier.
They are, because the payout is linked to the performance of underlying investments. So there's potential for higher returns, but also more risk.
So it depends on my risk tolerance.
Exactly. And how comfortable you are with market fluctuations.
Makes sense. And just to clarify, there are individual annuities and group annuities, right?
Right. You can purchase an individual annuity on your own, or you might have access to a group annuity through your employer.
Okay, so there's an annuity out there for pretty much every situation.
It seems that way.
All right, let's move on to those registered plans, the RRSPs, TFSAs, FHSAs. It's like alphabet soup.
Huh, yeah, there are a lot of acronyms to keep track of, but they're all designed to help us save for retirement.
Okay, let's break them down one by one. What's an RRSP?
An RRSP, or Registered Retirement Savings Plan, lets you make pre-tax contributions. So you reduce your taxable income now, but you pay taxes when you withdraw the money later in retirement.
So it's like delaying taxes until you're hopefully in a lower tax bracket.
Exactly.
Okay, cool. What about a TFSA?
A TFSA, or tax-free savings account, works a bit differently. You contribute after-tax dollars, but the growth within the account is tax-free, and so are the withdrawals.
So it's about sheltering your investment growth from taxes.
That's the main benefit.
What's an RIF?
An RRF, or Registered Retirement Income Fund, is what you typically convert your RRSP into when you retire.
Okay. It provides regular income payments during your retirement years.
Got it. And then there's the FHSA, the new kid on the block.
Right. The FHSA, or First Home Savings Account, is a newer option designed specifically for first-time homebuyers.
Oh, interesting.
It combines features of both RRSPs and TFSAs, allowing you to save for a down payment with some sweet tax advantages.
That's great for young people trying to get into the housing market. Okay, we've covered annuities and registered plans now. Let's talk about those mysterious segregated funds. What are they all about?
So segregated funds are basically investment funds offered by insurance companies.
Mm.
They're similar to mutual funds in that they pool money from multiple investors.
But there are some key differences, right?
Yeah. Segregated funds offer some unique guarantees that mutual funds don't.
Guarantees like what?
Well, for example, they often come with principal protection. So even if the market goes down, a certain percentage of your investment is protected.
Well, that's good to know.
And there are also death benefit guarantees, which can be really valuable for estate planning purposes. I see. So even if you pass away, your beneficiaries are still protected.
Exactly. And another big advantage is that if the insurance company goes bankrupt, your segregated funds are protected. That's not the case with traditional mutual funds.
Wow, that's a big difference.
Yeah, it gives investors a lot of peace of mind knowing that their money is safe.
Okay, so we've covered a lot of ground in terms of financial products. Now I want to shift gears and talk about the regulatory landscape of the insurance industry, like who's making sure that everything is on the up and up.
Well, we have a whole team of regulators working behind the scenes to protect consumers and maintain the integrity of the system.
Okay, tell me more.
So the main player is the AMF, the Autorité des Marchés Financiers.
The AMF.
Yeah, they're the primary regulatory body for the financial sector in Quebec. They set the rules and make sure everyone's playing by them.
So they're like the referees of the insurance world.
Exactly. Then you have the CSF, the Chambre de Sécurité Financière. They focus specifically on the ethical conduct and professional standards of insurance representatives.
Okay, so they're making sure that the people selling us insurance are acting in our best interests.
Right. They want to make sure that consumers are getting sound advice and that the industry as a whole is operating ethically.
Makes sense. And we've already talked about Assurus, which protects policyholders in case an insurer goes bankrupt.
Right. They're the safety net for consumers.
And then there's Retraite Quebec, which oversees all the retirement plans in the province.
So yeah, we have a pretty robust system of oversight. It's multi-layered and designed to ensure transparency and accountability in the industry.
That's reassuring to know. Okay, let's talk about those insurance representatives, the people who help us navigate this complex world. What are their main responsibilities?
Well, the manual really emphasizes their ethical and professional obligations.
Ethical and professional.
Yeah, they have to act honestly and fairly, provide clear and accurate information, and always put their clients' needs first.
So it's not just about selling policies, it's about building trust and providing valuable guidance.
Exactly. It's a relationship built on trust and expertise.
Okay, and what happens if an insurance representative doesn't meet those standards? Like, are there any consequences?
Yeah, absolutely.
Like what?
Well, there are civil remedies, meaning you could sue for damages if you've been wronged. The CSF can also take disciplinary action, like suspending or revoking licenses. And in cases of fraud, there could even be criminal charges.
Wow, so there are serious repercussions for unethical behavior.
It's not something to be taken lightly.
Okay, good to know. Now let's talk about something that might seem a bit out of left field: anti-money laundering and anti-terrorist financing regulations.
Yeah, it might seem strange, but insurance representatives actually play a role in the fight against financial crime.
Really?
Yeah, they're required to report any suspicious transactions that could indicate money laundering or terrorist financing activities.
Wow, so even when we're talking about something as personal as life insurance or retirement planning, we're still part of a much bigger system.
It's all interconnected.
Well, we've covered a lot of ground today, from the legal foundations of insurance contracts to the complexities of investment products and the regulatory landscape. It's been quite the deep dive into the world of personal insurance in Quebec.
We've barely scratched the surface, but hopefully this gives our listeners a good foundation to build on.
Exactly. And remember, this is just the starting point. There's so much more to learn and explore.
But that's the beauty of it all, right? The more you learn, the more empowered you become to make informed decisions about your financial well-being.
Absolutely. So to our listeners out there, if you're feeling overwhelmed, don't worry. Take it one step at a time. Do your research, ask questions, and don't be afraid to seek guidance from a qualified professional.
And remember, knowledge is power. The more you understand about personal insurance, the better equipped you'll be to protect yourself and your loved ones.
That's a great takeaway. Thanks for joining us for another deep dive.
My pleasure.
Until next time, stay curious and keep learning.